And the rupee trade slips in today, and we have seen weak dollar and strength in equities, but even then the rupee has ended the day at 62.20 on your screens, which is nearly 0.5% of a decline coming in for the currency. Let's get on board then Mr. Ashok Gautam, who's Senior VP and Head Global Markets Treasury, Axis Bank, and he joins us live for his take on that same. Ashok, hi. How have you seen the rupee trading within in the previous days? Because all the economic data that India had to provide has more or less come in line with what the markets were expecting. What do you think really bothered the currency today?
I think it was more related to the holiday in US yesterday, and that's why we saw some bunched up demands over Monday because nothing could be done. So Tuesday, today we saw bunched up demand, and we must also know that tomorrow we have a Mumbai holiday. In view of this, we were actually in the morning expecting some kind of weakening in the rupee, and rupee generally moved in line with the market expectation. So that's where we saw it ending towards 62.20. But if we also make it little the discussion a little broader in the sense like, see, off late we have been seeing a lot of inflows in January and February. If we add already 3.2 billion net in equity and debt, we have seen the foreign inflows in the country. So that has also reflected in the general strength of the currency which you were mentioning about. But today's little bit of weakness was technical in nature. Manisha, we must also see, Axis Bank has been talking about a rupee to be moving in a range of 2 rupees, which is 61 and 63 for quite some time. And I believe that going forward, this range will continue to hold. So within this range, I would request your viewers to keep an eye on 62.80 level, which I believe is quite critical, because any closing above that might trigger above 63 move. But at this point of time, rupee is well poised, and we will believe that maybe not tomorrow, but certainly day after, we'll again see rupee going below 62.
Ashok, much of the mood now would be at the election scenario. Would you say that whatever news from here till elections comes, would the rupee or the bonds would be looking at that, or is it going to be really election dominated?
I think it's now going to be a story about what is going to happen in election, and some of this strength in the rupee has also already factored in what market might be sensing some kind of a particular election result. And yesterday only we were looking at the INR vols, 2 months versus 4 months, and they are showing a very peculiar activity which indicates that going forward, based on the election results of the Lok Sabha, market is expecting rupee to gain maybe below 60. But we'll have to wait and watch, because that is only the option market of the INR which is indicating that. I still believe that it will be better, a prudent move to still play within the range of 61 to 63.
Ashok, most banks have been saying that while of course the scenario seems to have turned positive, it really is a vigilant RBI whose presence has been felt into the markets every time the rupee touches a certain level.
I think since Dr. Rajan came, we have seen rupee actually regaining some of the ground which it had lost, and rightly so. Reserve Bank of India has very ably demonstrated their resolve, and certainly the FCNR dollars kitty, 32 to 35 billion dollar, is certainly which is helping the cause of rupee. So market also believes, it's all sentiment driven. If market believes that Reserve Bank of India is well geared to take care of any eventuality, market will behave itself. So the expectation right now is that come what may, they will not let rupee slip in a much bigger way. So rupee is behaving. So around 62.80, we always see that dollars are being sold, and around 61 plus levels, which we believe that there is some kind of supply which comes from Reserve Bank of India. So 61 to 63 is a range which I will continue to put my bet on.
With that kind of a scenario, with that kind of a control that the RBI is keeping on the market, how are the charts reading?
Manisha, the dollar has been kept in a very restricted and constrained range for a couple of weeks now. And I have a feeling towards the financial year end, that is 31st March, you are likely to see a recoil kind of a move up in the USD INR. Now, the level that I am watching out for, which I've been advocating for quite some time now, is 63 and a quarter in the futures, which would be slightly lower in the cash because there is obviously a 0.5% or so premium in the future over cash. Once you see an advance or a breakout above the 63 and a quarter on a closing basis with higher volumes and open interest expansion, there will be a corrective upthrust in the US dollar, which will be also partially triggered by short covering, and it by itself will trigger further short covering or a bear squeeze, which might take the USD INR towards 64. I don't expect it to last, but before 31st March, I don't rule out one last hurrah of the USD INR bulls.